Hello guys, and welcome to the School of Candlestick Patterns, part number 5. Idag we're gonna be talking about the stars and how to use them in your trading. So yeah, let me roll the intro and disclaimer, and while you're seeing that, why not click the like button or the subscribe button if you're not subscribed to my channel yet. So see you there. Yes, so what are those stars we've been talking about? It's a group of reversal patterns also, and they are called stars because they have a real small body. The stars patterns are coming from the stock market, and they used to have gaps, but because we're using them in forex trading, we have to tweak them. As I said about other candlestick patterns, we don't always have gaps in the forex market, so we have to tweak those a little bit to use them in forex trading. So I will show you that also in the chart in the next slide, and we're gonna be talking about the morning star, the evening star, shooting star, and Doji stars, and how to use them in your daily trading, and why they are good to spot on the chart. So as you see in the chart here, I did choose a chart that shows a lot of them. If we take a look at this particular one here, this is an evening star, and an evening star have to, as I said, if it's a stock market, it have to gap above the previous candle. As you see here, it gaps above this previous candle, and the next candle gaps down and trade deep in the body of the first candle number 1, as you see in this picture here. So that are the rules of the evening star, and we have also the morning star, and it looks like something like this one here. It is the opposite of the evening star, and the color of the body doesn't matter. It did gap down, and then the next one gapped up and closed higher than the previous candle, which is even better, as you see here. We have also this one here. This hammer is also can be called a morning star, because the same goes here. We did gap down, then the next candle did close higher. Doji Star, they are the same as the evening and the morning star, and there is so-called shooting Doji stars, and they look the same as those I showed you before, but they open and close at the same level as you see on this candle here. And we have the shooting star that looks like this one, where market come trade higher, and then we have this gap, the long wick to the upside, and the day after we gap down and we did close below the lows of the inverted hammer. Yeah, that is shooting star, and I will show you in the next slides, one at a time, and why they are good at those levels. So the first one is morning star. As you see here, this star down here, the market was trending very strongly to the downside. You see how big are those two candles at the end here, and then all of a sudden you got this star at the support level. That show you that the bears are not in control anymore as they were before, and that should give you an alert to start looking for a possible reversal. A star alone does not mean that you're gonna get a reversal yet, but then the next candles opened and closed above the star and deep in the body of the first candle here, as you see here, and there where is your signal that this is a morning star. And usually you open your trade on the next candle, next market candle, and your stop loss should go below the star, an ATR or so, depends on your trading rules. Yeah, and very important that you have a structure level as here. You can't see the support. There was support to the left here, but we can't see it in this picture. So very, very important that when you see any pattern, that you look and see if you have support resistant, a trend line or a moving average, or anything that make you think that this will act as support at this level. Yeah, because it will not work all the time. Like this one here, we had this hammer, this morning star formation. We had also a very bullish candle after it that engulfed lots of candles here, as you see, but it wasn't a good signal, and market start rolling down again. Okay, because there was surely no support at this level at all, and that's why that was not a good pattern to trade. But when you have support, especially if it's a strong support, then you're good to go and take the trade. Yeah, the evening star, as you see here, market was trading strongly to the upside, and then we got this gap up, we got this smaller body candle, and that was at a good resistance level, and then the next candle traded deeply below the evening star, and the market start heading down all the way. Yeah, that shows us also a very good example of the evening star. So you need a strong uptrend market with large candles, and then a small body candle that if in a stock market it have to gap up, so the body of the evening star shouldn't touch the first and not the third candle bodies. But once again, as we are using them in forex, we don't have gap a lot, so this rule have to be tweaked. So this body may look something like this, and the body of this one may look something like this in forex. Yeah, that's still okay. Sorry for my drawing, I suck in that. And yeah, that was the evening star, guys. A Doji Star is this candle right here, as you see here, and it is the same as the evening star, but it's called Doji evening star because the open and the close were at the same level. And as you see, the market was trending strongly up, and we had two very big candles. If you look at the momentum here, but then we got this Doji Star, and the next candle came and closed below the Doji and engulfed this candle here also. And there where you have your trade opens, your stop loss goes somewhere up here, and the market start heading down. As you see here, when the market came at this level, we got another Doji Star, and this time it's a Doji Morning Star, and we had this support to lean on, and then we got a candle that opened and closed above the Doji Star and above the previous candle also, and then we got some correction to the downside and trend reversal. Okay, that was the Doji Stars. The shooting star is the same almost as the evening star, but the shooting star, you got an inverted hammer with where you have a long wick that should be the wick should be twice the size of the body. And the same goes here, guys, that you have to, when you trade those signals, they have to be at a good resistance and support levels, yeah. And here it was a good resistant level that we can't see in this small picture here, but once again the market was trading strongly to the upside, and we got this inverted hammer. It's called inverted hammer until now because we can't call it the shooting star until we see the close of the next candle. And then we got the next candle that traded deeply deeply below the inverted hammer and deeply in the body of the first candle, this one here. And when we got this this close here, then we are good to go and take the trade. And as you see, we got a really good reversal in this market. And one more thing you can add to those entries is a filter of let's say RSI, or if you're using another oscillator and you find any divergence, then the signal will be much stronger in that case. Let's go to live chart, and let me show you some of them before we end this video. So yeah, see you there. So guys, here we have a very good example how to use those stars in the chart and in confluence with support resistance, and in this case the RSI. So if you look at this market here, we're looking at the Aussie CAD 4-hour time frame. You see that we did started down here, and we had this very strong momentum move. And by looking at the candles before these two stars here, you see that we have very big candles if you're going to compare to those two stars here. The good things and what make those stars valid, that the RSI, as you see here, is on the extreme, and we got those stars. Let me crunch this chart at this resistant level at the same time, yeah, which make it even more important level to look at. So we had a strong uptrend with big candles, and when price hits the resistance, we got this first star here, and then we got the second star, and the signal came when we got the close below the stars, and it also was a very good signal because it did engulf this candle here. In that case, you could take short on next candle, or if you think that this is a little bit of a big move, you could wait to see a little bit of retracement to the upside on lower time frame and trade it to the downside. But you see how powerful when you get the signal at the right place on the chart, yes, adding to that very extreme RSI on the chart that give you even more confidence. We have another examples here below. As you see, we start to get those hammers after this move, and they also came at a good demand area, as you see here, this order block down here, and then start moving up, and it was just a correction to the upside. When price did reach this structure here, as you see, this is also a good structure to look at because it was acting as resistance in the past. Let me put a line and show you what I mean. You see here price had trouble in this area also. We can also add a Fibonacci retracement for this leg here from the highs to the lows, and we see that we at this level, when we got this shooting star or doji shooting star, it came also at the 50% retracement in confluence with this those 2-3 resistant areas here, and then the next candle was also very good engulfing candle that did engulf the 4 previous candles before it almost. And here is your entry signal, and once again you can wait for a retracement. That will not happen all the time, but in this case we had very good retracement where you could enter this trade and put your stop loss above somewhere here, maybe an 80R or so above the highs. And as you see, price kept heading down after this shooting star formation. So let's see if we find an example of evening star also. Here we have another good one. It's an maybe an inverted hammer. We got first a hammer, then an inverted hammer, also on a good support level. The RSI was on the extreme. The next candle was, we got a close above the inverted hammer and deeply in both previous candles, and there you go, long on the next candle. In this case we didn't have a lots of retracement, but this was also not a huge candle. Your stop loss should be somewhere about 70 pips, and you could if you want to trade this to a retest of these highs, that would be also possible. Let's see if it make it. Yes, it did. So this would give you you risk 70 and you shoot for 180 pips almost. So that was another example. Let's see here if we got something. Well, we got this star here but it wasn't as powerful as the ones before, and we had a close below, and we did a very good move to the downside. Here once again a Doji Star, followed by another Doji Evening Star, two of them. Then here we got the signal on this candle when we got a close below both of them and deep in this previous candle, and we had some divergence on the RSI, and as you see the price went down all the way back to these lows, and this one came also at a good resistant level that we was talking about before. So yeah, those are some live chart example, guys. I hope you see those videos beneficial for you. Please, if you do like them, don't forget to hit the like buttons and share the videos over on social medias. If you do have any feedback, just leave it in the comment section below. Yeah, so thank you very much and see you next time. Bye bye.